Hello everyone, this is Evan from the Trade Risk here on Saturday, March 5th with a weekend market recap video. We are first going to analyze the current market environment. We're going to look at some markets and then we're going to look at some of the hot and weak sectors here in recent weeks. Now, before we get into things, I'm going to just do a quick programming note here. I'm going to try and reduce the length of these videos. Some of these videos going 15 minutes plus I think is too long, and I applaud anyone who can get through all of that time. But I'm going to try and shrink down, curate a little bit better the more actionable ideas and the more actionable content. Try and get the videos at least under 10 minutes, these long form recap videos. But if you guys have questions, comments, what you'd like to see, ultimately these videos, are free. They're here to help you. They're here to provide value and get you, ready for the next few trading days. So if you have any thoughts, leave a comment below. Find me on Twitter, social media, on my website, contact me. Easy to get a hold of. Let me know what you think, but I'm going to try and shrink these down a little bit. Maybe produce a few more. Maybe the frequency will go up, but just let me know if you have any thoughts on this. That's my plan going forward. So let's jump into it. This one now might be a little bit longer after this spiel. The SPY S&P 500 had an impressive week again. I feel like that's what I say every week when I do these videos, up almost 3%. And we're really starting to push in to some lofty territory, to some levels that have a lot of previous supply associated with them. We've tackled and closed above this big round 200 level in the S&P 500 in the SPY ETF. We discussed in our midweek video that this is about the 61.8 golden ratio retracement from the highs here back in this recent leg lower. So from November here, taking this leg all the way down here, I think it comes in right around 199.50 or so. If you take it from here, from the very highs of the S&P 500, we are basically at the 61.8 right now. Again, if you're into Fibonacci, that is interesting to you. Otherwise, I put out an article. Go check it out, thetraderisk.com, on the NIMO, on the breadth thrust that we've seen over the past couple of weeks. Some interesting facts and comments there. It's on the homepage, so check that out for more detailed on what I think about the NIMO, the McClellan, the summation index, all that good stuff. So I think right now, the story hasn't really changed. Short term, on this daily time frame, the trend is higher. The bulls are in control, and there's little signs of cracking. There really are. We do have this bit of a topping tail today, or on Friday's session. Couldn't quite close at the highs. So clearly, we can see this market has gone so far and it's stretching, but it can continue, right? It's been overbought now for a few days. It's continued to grind higher into these levels that we would have expected some of this overhead supply to kick in, and it's just not the case yet. We've seen a lot of different sector rotation, a lot of sectors participating, so it's been really tough to try and call a top here and get short this market. Now, coincidentally, I am short this market. We did get short this inside the trade risk here on Friday. Looking for a little, cyclicality here, looking for this market to retrace, kind of roll over. We do still have long positions on, so, we're still playing kind of both sides here, but we are looking for this to maybe at least cool down, go sideways. If it moves sideways for 3 or 4 days and then try to break back out, I'd clearly cover the shorts. That would be healthy action. Let these moving averages catch up. So I think it's at an interesting spot right here. It's certainly a spot to take notice. Weekly chart, you can see that we're trying to poke our head above these previous pivots and this previous supply in here. So certainly at an interesting spot. Again, I said it last week. It's still my belief it's not a high probability place to initiate new longs. But on the same token, do your own due diligence. It's based on your own strategy. I said that last week, and here we are up 2.74%. So again, just my thoughts here on where we are. Again, check out that article I wrote just yesterday, actually, on the Trade Risk. Short article, but it'll talk about kind of the bullishness of maybe the intermediate and long term, and maybe some of where we need to cool down in the short term. Now, if we look at some other markets, IWM, very, very clean. Look at these candles here, just stair-stepping higher. Look where it's retesting, though. It is these highs here, so we got right to retesting the October 2015 lows, and if you go back, this is actually the lows from previous this range here in 2014 as well. So a pretty big level when you're starting to retest, these bigger levels on, running on fumes after you've already moved up 10 or 11, 12 days. It's just much more difficult traditionally, historically, to get through them. Again, doesn't mean we can't, just means that the probabilities favor some type of rest. The Qs are sort of interesting here. They're not really participating the past 3 days. They haven't marched higher. Look at the difference between the Qs and the IWM. Look what this has done, just stair-stepping higher. Nice bull candles here, full-bodied candles, closing on the highs each and every day. And now look at the Qs, just kind of slugging sideways here. Now, when we first started to move sideways here, I said, well, I'm not going to take too much notice of just a day or two. Structurally, everything's fine. Now, after 3 days of these, of these hanging men and this doji and just, this sort of indecisive action here, now I'm starting to be a little more aware of it. I think holding above 104 or so, that's important if we start to break back below it. If this market, put it this way, if the market wants to roll over, look for the Qs, keep an eye on these guys, see if this leads us to the downside. They don't seem to want to enthusiastically lead this market. Again, the formation here is still very healthy. Structurally, nothing's wrong. It could just be healthy digestion, but take notice of it. If you start to see the Qs roll over, maybe that means the market will be following. Now, let's get into some other markets here. TLT first, you can see starting to find some support down here right around 128 or so. This is where we went sideways back in early Feb. So again, still sort of healthy digestion inside of this nice uptrend that it's had. It's clearly range bound right now. It's going to need some more time, so it doesn't look too actionable to me yet. Gold metals found a little bit of a reversal day here, tried to push higher, closed on the lows, so it looks a little tired. This trend has been strong, but it did break out above resistance here above 119. Looks good. Aggressive shorts, maybe you can pull on the signal here, but still not my cup of tea. I would just avoid that. Silver, again, tried to get going. Look at this big trend line here that it's been maybe bumping up against, starting all the way back from January 2015. Still can't take out this this series of lower highs here over this bigger picture. So keep an eye on it. Again, an impressive move this week, but to really see some more confirmation on some of these larger time frames, it's going to have to get above $15. UNG, very orderly downtrend is still intact, and I think the orderly fashion that we're just trending, grinding lower is probably one of the most concerning things. We're not seeing this doesn't look like capitulation to me. This just looks like orderly selling. So again, it's just an overly beaten down market. Sure, we can have a squeeze at any time, but so far I just wouldn't want to try and play for it. USO, nice march higher particularly on Friday, all of this week, but we're back up now to the top end of this range. We've been talking about this for a while. We do believe that we're range bound here between $8 and $9.50, $10, maybe up to that level. I think we're getting to the high end here. I think this is where the difficulty is going to set in. Keep an eye on this. Would be interesting if we saw some type of push up failure and close on the lows, some type of reversal signal heading into next week. That's what I'll be keeping an eye on. But for now, again, a longer term trend clearly down in USO, but it is made a nice move over here in the past couple of weeks, but it is starting to get into some interesting areas. Now, if we look at some of the sector analysis here, I think, there's a few standouts. I mean, everything's looking good. Utilities, I think, is more so. Maybe I'm biased because we are still long utilities. We've been long utilities for most of 2016 at this point. But look at the close here, up 2% this week. Nice, clean range breakout back in January, and to me looks like it's wants to get back up here and retest the 2015 highs. Everything looks good on these longer term time frames. You can see on the daily chart starting to come back together, worked off those overbought conditions. That looks good to me. Staples look really good to me, breaking out to new all-time highs. Nothing not to like here. Very constructive action, both of these sectors. Now, there's most of the other sectors had very impressive weeks as well, but as far as overhead supply and just relative positioning of where where those sectors lie, I think utilities and staples still look the best. Energy, of course, has 6.5% up week today. That's impressive, but still in a long-term downtrend. So that looks like it would still continue to be pressured. On the downside, on the sluggish sectors, sectors. Healthcare, look at healthcare has not taken out its January highs. Most of these other sectors are already above the highs here from January. It's not. Keep an eye on that. It closed red on the week. Actually, no, it closed up just 16 basis points, almost flat on the week. These are certainly the laggards. And then check out IBB, which is the biotech index, up slightly on the week. But again, they're not even above really the February highs. So you can see the relative underperformance here. If this market is going to roll over, if you're a believer that we're not done and we have lower to go, keep an eye on the IBB, keep an eye on XLV for your trade ideas. Now, individual names, we're going to walk through just a couple. Apple made an impressive move this week above the highs here made from January, above this little range, 101, clearing back into the 103 now. So it is comfortably trading with that 100 handle. This looks good. Again, not to say that it can't retrace and come down a little bit. Long term, it's in a downtrend now on this daily time frame. So keep an eye on this, but this looks constructive. Bulls getting it done there. Netflix, similar situation, convincingly clearing back above this $95, which was support back here for most of 2015. That's constructive, looking pretty good. Tesla, same thing, back above a very important level of 185 or so, which was holding as support for 2014 and 2015. We're back above that, so that looks constructive all around. Very similar patterns there. And finally, GoPro. Get a lot of questions on this actually. GoPro filled the gap here on Friday and then had a very ugly close. So not an ideal close whatsoever, but I think this chart is starting to look a little bit more constructive. It really needs to hold though above $12.70, $12.50, the lowest, to really keep the pent up kind of bullish momentum in this name, to keep us potentially grinding higher here. It's been beaten down quite a bit, so look maybe for a little bit of mean reversion here, in the coming weeks if it can hold these prices. So that's the video. Again, if you guys have comments or if you like the video, again, subscribe, leave me a comment, and as always, thank you for watching, and I will catch you guys next time.